Economic data released this week has affirmed the country's economic slump. South Africa has dropped 14 positions in the World Economic Forum Competitiveness Report, and ratings agency Fitch is warning that the country, that increasing political uncertainty in the country ahead of the ANC elective conference in December will hamper economic growth. So joining us to discuss this week's economic stories is Nedbank Economist Nicky Weimar. Thank you so much, Nicky, for your time today. It is never a dull day.
No,
in South Africa, certainly not. I think let's start with the unemployment numbers, because that, again, seems that in the quarter where we came out of a recession, a technical recession, we're still seeing jobless growth. It's very interesting.
I think that that's actually pretty normal. You usually, jobs tend to lag the cycle, so companies would want to make sure that the increase in demand, the increase in sales and production, that it's permanent before they go ahead and commit to taking on more staff, which of course raises their cost of production or their operating cost on a far more permanent basis. So you don't want to just on a whim go out there and employ. So I think that is a fairly normal pattern. Is
there any sign that those things are going to become a more permanent feature?
Well, that is of course the big question. Now you remember last year we started the year shrinking, so we had a decline in GDP. Then we bounced back quite strongly in the second quarter, and then it all just fizzled out in the final half of the year, and we winded up with a growth rate of only 0.3% for the year as a whole, which is virtually not growing. I mean, that's just standing still. Yes. So the question is what will happen in the third quarter. Now the July numbers is not going to give anybody a huge amount of hope. You would have noticed that the economy ran out of steam yet again from that higher base in the second quarter. We saw weaker numbers in retail sales, we saw weaker numbers in manufacturing and mining production, and we saw the only bit that remained fairly robust, which is maybe a good sign, is car sales. But it is coming off a very low base. So generally speaking, it looks like we're going to lose a little bit of momentum as we go into the second half. We will probably do, as an economy, a little bit better than last year, but it's still going to be a very weak year. We have a growth rate or growth forecast for this year of 0.7%. You look at the other numbers out there, they range between 0.5, 0.6. So everybody's anticipating a bit of a loss of momentum. Now, how does that translate into your jobs numbers? I think you're probably only going to see jobs really materially improve once this recovery becomes more permanent, and based on current expectations, that's only next year.
And a big part of that seems to also be around event risk. We've seen what both Moody's and Fitch have said this week, and the concerns that they have about political uncertainty, about corruption, about the public sector, and all of that. And obviously we're seeing the rumblings in the private sector and their involvement or potential involvement in state capture. What does all of that do for anybody looking at South Africa as an investment destination?
Well, clearly, I mean, it has been extremely negative, and it's been extremely negative for quite some time. So, you know, if you look at us in terms of the global competitiveness rankings, in absolute terms, South Africa is a far more developed country and more diversified economy than many other African countries that are coming off a very low base. But while some of them are moving very strongly in the right direction, we appear to have been moving in the wrong direction in terms of, you know, institutional capacity, in terms of institutional integrity, in terms of essentially our infrastructure. We haven't really lifted any of the infrastructure constraints. Policy is just standing still. Nobody's exactly sure what our economic policies are. That's weighing on how businesses, on affecting growth, affecting investment, affecting employment. And then finally also, of course, we have seen the effect of corruption. And in the World Competitiveness Report, corruption is listed as the key problem for many businesses of operating in South Africa.
And that affected our auditing ranking. We normally ace that.
Absolutely. So that, I don't know how much that has to do with the KPMG. Clearly it weighed on those rankings. You have to reflect it if you ain't going to be honest. So there has been a significant deterioration, and I think that is our big problem. And moving forward, we need to address these basics. And if you look at the comments made by Fitch, and you look at the comments even made by the Reserve Bank Governor earlier today, saying we need political stability if we want to undertake structural reforms, because they're not popular ever.
Yeah.
They contain short-term costs. So you need a government which has got broad support, that has legitimacy, and that the people trust to take that on.
We'll leave it.